Chipotle reported fiscal 2023 first quarter earnings results and they crushed it again. This company has been demonstrating phenomenal performance for what seems like 8, 12, 16 quarters now. I've been following the company for 4 years, I want to say, and ever since I started following this company, they've been performing excellently. I mean, excellently. That said, the stock has been expensive. And so it's not like the market is unaware of how good Chipotle is at what it does, but it just keeps doing better. So it keeps people, the market knows Chipotle is really good. They say to themselves, well, we're going to price in this excellent growth. And then they keep doing even better than what market participants were expecting out of them. And today, they did it again. They surprised to the upside again. And I'm really impressed with this company because of the outperformance of the industry, because of the skill in management, how they managed during the initial phases of the pandemic, how they're managing now out of the pandemic. It's really an impressive feat from management. So, to look at this quarter's results specifically, revenue increased by 17.2% to 2.4 billion. Earnings per share jumped by several dollars up to $10.50, almost doubling from $5.70 in the same quarter last year. Almost doubling earnings per share. Comp sales, which includes sales growth by excluding any new stores, right? So revenue grows when you have more sales in your existing stores and you add sales from new stores, right? So that just piles it on. But if you exclude the new stores and you just look at the existing locations that were open for at least 12 months, sales in those locations overall increased by 11%. This is being fueled right now by in restaurant sales. That grew by 22.9%. As the US economy is reopening, more people are going out, leaving their homes. Maybe they've returned to work in person and there's a Chipotle nearby. Maybe they've gone back to school and there's a Chipotle nearby and they're visiting Chipotle, eating inside more often. That's being supplemented by sales of people buying Chipotle to consume not inside the restaurant. That's also doing okay. That's not suffering as much. It's not like that collapsed and that's being replaced by the in restaurant sales. That's not really the case. It's been a supplement, right? It's been, maybe you ordered Chipotle for delivery, I don't know, once a month. And now, on top of that once a month that you ordered Chipotle for delivery, you're also visiting a Chipotle restaurant in person once a month. So it's in addition to, rather than instead of those those orders for delivery. And that's been fueling Chipotle. They've done a really good job with that digital channel. They've done a really good job adjusting the business. I'll talk about this a little more down the line, but now with every new Chipotle that they open, most of them come with a drive-through location so that you can go. It makes it more convenient to order online and go pick it up, or just go pick it up. And that's fueling sales growth as well. The operating profit margin jumped to 15.5%. This was up from 9.4% last year. The company opened 41 new locations, and 34 of them had those Chipotlanes I talked about earlier, which are essentially drive-throughs or places where you can pick up your order when you order online, so you don't have to go inside of the Chipotle to actually pick up your food. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. Here's two things that I found to be truly impressive as well. Food, beverage, and packaging costs were 29.2% of revenue. down by 180 basis points year over year. Now, I say impressive because we're all aware of the impact of inflation, right? We're feeling it everywhere, every day, in almost everything we buy, and so are businesses like Chipotle. And yet, they were able to leverage their price increases. They increased their menu prices and to offset those rising costs of food, beverage, and packaging. Similar to their labor costs, which are down to 24.6% of revenue compared to 26.3% in the same quarter last year. Chipotle was one of the first to increase wages to attract employees, and they gave pretty big wage increases. And despite those wage increases, they've been able to leverage that with higher sales, higher menu prices to offset those wage increases. And now the company's more profitable despite those increases in wages. Really good performance. They're forecasting comp sales growth of mid to high single digits for the rest of the year. Interesting there. So they're expecting a slowdown from the rate of growth in the first quarter. In the first quarter, comp sales increased by 10.9%. So if for the whole year they're only expecting mid to high single digits, that means the second, third, and fourth quarters are going to be less than 10% growth because they've already got 11% growth in the first quarter, but for the whole year they're expecting less than double digit growth. So this is something to keep an eye out for the rest of the year with Chipotle. Maybe these price increases that they put in are finally going to start impacting customers. Customers might finally say, you know what? That's a really expensive burrito. No, thank you. I'll switch to something else, right? They might finally say that. And then for the year, they're expecting to open overall between 255 and 285 new locations, which would mean a higher pace of growth because they only opened 41 in the first quarter. If we extrapolated the rate in the first quarter, that would only be 164 new locations, but they're saying it's going to be between 255 and 285. So the pace of new location additions is going to grow for the rest of this year. Overall, another really good quarter for Chipotle, a company that's been performing excellently over the past couple of years. I haven't been recommending this stock as a buy very aggressively or very bullishly, despite of those excellent performance metrics because of the expensive valuation. I felt like the excellent performance is already priced into the stock, or much of that excellent performance is already priced into the stock. And if the company should have a hiccup over the next couple of quarters, that might be a huge risk to the stock price declining. And so I haven't been very bullish in recommending the stock, even though I've been, commending management and telling, all my viewers just how good of a job Chipotle has been doing in its business. So I don't know. It looks like they're forecasting a slowdown in comparable sales growth. If that does happen and the stock price falls in response to the slowdown, I would look at that as a buying opportunity. So I would view Chipotle as one of the stocks I would have on my watch list, just, waiting for that opportunity to get a good price to buy this stock for, when there's maybe an overall market decline. Nothing specific to Chipotle, but just a market decline. To view that overall market decline that takes down Chipotle as a way to get into the stock at a better valuation. All right, that's all I've got for this video. Importantly, if you enjoyed this video, I've been making a lot of videos like this one, and I'm going to continue making a lot of videos like this one. So if you don't want to miss out on those updates, you want to be subscribed to my channel. I provide a lot of insights on stock specific news, right? I go into deep dives into stocks. I also make videos on, my favorite stocks to buy and things like that. But I also take deeper dives into stocks that gives you a lot more insight into why these companies I think are a buy or not a buy. Instead of just saying, hey, I think you should buy it, I go into deep analysis into why you should or why you shouldn't. All right, so I really hope you will subscribe, and I hope I'll see you again for another one of my videos. Thank you so much for watching.